What is going on? Welcome back to the channel. So today when I talk to you about AstraZeneca, they just dropped their Q4 earnings earlier this morning, and I want to go over some of the absolute key takeaways from the earnings that you need to be aware of, what the current data points are saying, and just where it might be going from here. Before we get into any of that, make sure to hit that thumbs up, and with that, let's get right to it. So today it did close at $72.36, up 2.01%. It did beat on revenue, so revenue expectations were 14.21 billion, came in at 14.89, but it did miss on the earnings per share slightly by 2 cents. So expectations of $1.07, and then it came in at $1.05. So not really, clearly the market wasn't really that concerned all that much. As far as the parameters for today, it did have a low of $71.96, a high of $74.61. So kind of all over the place for the most part. Market did have a lot of fear, so I think it did hold up fairly well. Going into the earnings though, you did have the implied move of 4.35%. And so essentially that's pretty good. You also did have at the same time all the actual like 2 weeks, 1 week, 3 days, and 1 day, all leading up to their earnings being green. So ultimately kind of piggybacking off of it looks like Q1 2024 when that same kind of scenario played out. So hopefully bigger and better things might be coming. I do like to go over shorts, not because this is a squeeze stock whatsoever, but it's good to analyze what they are doing. So today they did return 215,000 shares. 0.83% of the free float is being shorted, and you can kind of see recently shorts did increase, not to the point again where it's a squeeze play, but they clearly were anticipating for a broad miss on their earnings. So again, that's something to keep in mind. So it went from roughly 0.66 to 0.83% short interest. So still nothing crazy though. Moving on from here, looking at the options from today, 5.32 million in calls, 1.15 in puts, 42% of all the options being done were neutral in nature. And you can kind of see a lot of big money getting in during this time period right here, which was kind of abnormal, but at the same time, it goes to show that big money is paying attention to it. Looking at the overall premiums, so today, 6.4 million in total premiums, 3.8 the day prior, 1.1 the day before that. So you did have very, very high overall options, so people were paying attention to it, and it hasn't been that high since looks like December the 19th. So pretty good stuff for that. Aside from that though, of the call options that were purchased today, you see a consensus for it to be roughly around that $78 range, a very strong consensus for it to be above 77 next week. So ending February the 14th, you had 10,000 purchased at that $77 strike price. So most likely a lot of these strong options that was done right up here were linked to that. So again, $77 plus is anticipated. Bears though, on the flip side, they are anticipating for it to be sub $70, so a little bit more upside still is anticipated, but still nothing really crazy coming from the bears. With it closing at $72 and change, it is trading right between this R3 and this R2. So 71.87 is going to be that next strong support, followed by 71.38. So kind of just stay tuned and watch for those. Flip side, 72.66, and then 74.72 is going to be the next strong target / resistance points. So similarly, just kind of watch for all of that. There was only one rating that came out today, no price target, but it was just a maintained their buy rating that was done by TD Cowen, Steve, who has a 61% success rating. Although you didn't really have that many analysts really paying attention to it. I've never understood this, but you did have roughly 3 recent ratings. So I don't understand why analysts give ratings prior to an earnings. It doesn't make that much sense. But you did have an $88 one that was done 10 days ago, $87 16 days ago, and then $91.70 17 days ago. And that, as of right now, I believe that, or 97 is the highest for this, and that was done 8 months ago. But as a consensus of all these ratings, $88.68, and that does represent a 22.5% upside. So this is a quick summary as far as the data points. So now I'm going to go over their actual earnings. So definitely stay tuned and let me know if you have been buying, if you've been selling, what have you been doing with this company, and was there any kind of key takeaways that you really liked from their earnings. But aside from that, let's get right to it.
AstraZeneca outlines 3.2 dividend hike and anticipates strong 2025 growth. Earnings call insights AstraZeneca, AZN, Q4 2024 management view. CEO Pascal Soriot highlighted a strong 2024 performance with total revenue up 21% and core EPS growth at 19%, reflecting solid business momentum supported by pipeline advancements, including 9 pivotal trial readouts representing over $5 billion in non-risk adjusted peak year revenue potential. He also reiterated the company's ambition to deliver 20 new medicines by 2030, 8 of which are already approved. CFO Aradhana Sarin noted that full-year total revenue grew 21%, exceeding guidance, while product sales climbed 19%, driven by strong demand across regions and therapy areas. She emphasized that core EPS reached $8.21, representing 19% growth, and announced an increase in the 2025 full-year dividend to $3.20 per share, cents per share from $3 in 2024. The company addressed ongoing investigations in China regarding importation taxes and potential fines, stating that they are cooperating with authorities, but disclosed that liabilities could range between $0.9 million and $4.5 million. Soriot expressed confidence in the company's long-term growth in China despite current challenges. Outlook. Guidance for 2025 projects. Total revenue growth in the high single digits and core EPS growth in the low double digits, supported by robust demand for innovative medicines and new product launches, despite headwinds from IRA impacts in the U.S. and VBP inclusion for key products in China. Management highlighted strategic investments in manufacturing and R&D, including a $3.5 billion U.S. investment aimed at supporting clinical trial manufacturing and facilities for advanced technologies like ADCs and cell therapies. The company anticipates a low single-digit adverse FX impact on total revenue and mid-single-digit on core EPS in 2025. Financial results. Q4 saw total revenue increase by 25%, driven by strong product sales and collaboration revenue milestones, including $600 million from 𝗪𝗓𝗧𝗛. Core operating expenses grew by 14%, well below the revenue growth rate, reflecting efficient cost management. Alliance revenues surged 55%, reflecting demand for HER2 and 𝗪𝗓𝗓, while collaboration revenue climbed 54% due to milestones from 𝗪𝗓𝗧𝗛 and Koselugo. Oncology revenue reached $22.4 billion in 2024, with Tagrisso, 𝗪𝗓𝗧𝗛, and Enhertu delivering strong growth, and HER2's revenue grew 54% in Q4, supported by expanded indications, including HER2 low and ultra-low settings. Q&A. James Gordon, J.P. Morgan asked about China's Q4 revenue trends and the outlook for 2025 amid investigations and VBP inclusion. CEO Soriot explained that the company expects some headwinds in China, but remains committed to growth driven by new product approvals and strategic investments. Emily Field. Barclays queried on the regulatory outlook for Datroway in non-small cell lung cancer. EVP Susan Galbraith confirmed ongoing discussions with the FDA and plans for breakthrough therapy designation, highlighting the drug's potential for significant market opportunities. Rajan Sharma. Goldman Sachs inquired about 2025 operating margin expansion. CFO Sarin reiterated the company's commitment to achieving a mid-30s operating margin by 2026, while maintaining disciplined cost management. Sentiment analysis. Analysts expressed concern about the ongoing investigations in China and the potential for financial and reputational impacts. Questions focused heavily on regulatory and compliance risks, suggesting a cautious tone. Management maintained a confident stance during prepared remarks, particularly on pipeline progress and long-term growth targets. Soriot emphasized the company's robust global portfolio and strategic initiatives to offset headwinds. Compared to the previous quarter, the tone from analysts was more pressing regarding China-related risks, while management remained consistent in projecting optimism about the company's overall trajectory. Quarter-over-quarter comparison. Guidance language shifted slightly, with more emphasis on addressing headwinds in China and IRA impacts in the U.S., compared to the prior quarter's focus on upward revisions to 2024 guidance. Strategic focus expanded with increased capital investments in the U.S. and a stronger emphasis on advanced technology pipelines, including ADCs, bispecifics, and cell therapies. Analysts' attention shifted from broader growth trends to specific compliance and regulatory challenges in China, reflecting heightened scrutiny of external risks and concerns. Management noted ongoing investigations in China related to import taxes and potential fines, which could impact financial performance. Analysts raised concerns about the impact of IRA in the US and VBP measures in China on key medicines like 𝗪𝗪𝗡 and 𝗪𝗓𝗧𝗪, alongside uncertainties surrounding extended market access for newer products. Management highlighted mitigation strategies, including leveraging the global portfolio, maintaining operational efficiency, and accelerating launches in emerging markets. Final takeaway: AstraZeneca's Q4 2024 results underscore strong business momentum, driven by robust revenue growth, key product launches, and significant pipeline advancements. While ongoing compliance issues in China and IRA impacts present challenges, management remains confident in sustained growth through strategic investments and portfolio diversification. The company's long-term ambition to achieve $80 billion in revenue by 2030 appears supported by its extensive pipeline and operational efficiency.